Welcome back to the Tinubu conference day, and thank you to those of you who are just joining. I'm Dipesh Patel. I'm editor-in-chief at Trade Finance Global, and it's super exciting to see the various geographies we have people tuning in from. I can see people from India, the Middle East, Belgium, and Poland, to name a few. Welcome, welcome. This morning, we're going to be talking about how to launch a successful trade credit venture. In an industry where deep market knowledge and strong connections are some of your most powerful assets, it may seem slightly paradoxical that there's significant room for new entrants. But in this session, we hope to bust some myths and highlight how technological efficiencies, stakeholder engagement, and regulatory compliance can really help to drive success while addressing some of the key challenges for new entrants. I'm going to ask my panelists to come onto the virtual stage. Welcome and thank you very much for joining. And I'm going to ask Amel, Benjamin, Carmine to join now. Hello and welcome. So, quick introductions first of all. Who are you? Where are you from? What do you do? If you can give a 30-second elevator pitch. Benjamin, let's start with you, please.
Yeah, thank you. Hello, Dipesh. Hello, everyone. I'm Benjamin. I'm a sales manager for Tinubu Credit Insurance Solutions. My background is risk analysis. So I used to manage teams of risk analysts in my first part of my career. And then I moved to account management and business development for Tinubu. And this is where I had the opportunity to work on a number of credit insurance projects, especially launching new projects.
Thank you very much. Carmine.
Yeah, hello to everybody. So thanks for this invitation. So I'm Carmine Mandola. So I had a long experience in credit insurance with two companies, with Coface and Credior. So I worked in different countries like Morocco, Israel, Italy, France, and so on. And I know very well this sector because I had the opportunity to create two companies from scratch. And this is why this kind of webinar for me is very interesting because it gives me the opportunity to share my experience with everybody.
Thank you very much. And last but not least, Amel.
Hey, I'm Amol from SBI General. It's a pleasure to attend this conference, and actually we were the company with whom Tinubu tied up to launch a product from scratch. So we have done it hard way, but successfully. So with the collaboration of Tinubu, and that gives us a confidence that the such same products can be launched across if there is an intention to do so.
Thank you very much, Amel. So, in fact, I'm going to ask you to start. Amel, why should companies consider launching trade credit insurance as a totally new product line?
So I can definitely answer from view of SBI General, how did we do it or why did we do it and why anyone should consider. So we are a all products general insurance company. Trade credit insurance is a niche product. It gives you three things basically. One is connect with the top management of your customers. You are interacting with them on a regular basis. You can expand your penetration with such clients for long term, and being a niche product with a probably a good loss ratio if managed well can contribute healthy numbers to the bottom line. So all in all, it's a win-win if done correctly. And that's why I believe that we should consider that companies should look at it as a product, also contributing to, insurers stand between the client becoming an NPA. This is one of the product which is most important product for anybody to sustain their business. So you are contributing to the economy as well.
Thank you very much. And I'm going to flip the question on to Carmine. I think you're on mute. Oh, Carmine, you're on mute.
Yeah, it's better now. So this is very good question, Dipesh. There are several reasons for that. So as Morgan said, due to the business problems in global trade, economic volatility, the traded credit insurance can provide protection against customer defaults. And this is why it's a growing market. There is a growing market demand. This is one reason why a company should launch a new business line like credit insurance. Another point is that through this launching of a new business line can open new business revenue, and this is important for the company. Through this product, you can also improve the customer value proposition, because offering credit insurance alongside existing products, you can add value to the customers, and this is very important for them. You can also improve the customer relationship, because helping business manage receivable and safeguard against non-payment, the offering company look like a trusted partner in risk management. So you can help your customers in order to manage the risk management, and this looks like something very important for them. There is also another point, is that often the SMEs and the emerging market, they are missing access to credit insurance. So if you have other companies that launch this new business line, you can have much more offer, and you can cover this area of this business that are not covered at the moment. Another point can be the synergies with the reinsurance. This is something that Amol said. So the reinsurance often can support the credit insurance program. In this way, they can mitigate the risk exposure of the companies. Last point could be the opportunities for the technological innovation. So with the introduction of artificial intelligence, we can have a big data processing and automation. In this way, we can offer credit insurance in a more efficient way. So in conclusion, launching credit insurance as a new product line is a strategic move for companies. With the right technology, the good partnership, and the risk management practice, the company can position themselves for a long-term success in this dynamic and essential market. And another point that I would like to underline is that the demand of a credit insurance, the growth of the demand of credit insurance is very high. We have an average rate of 7% for the next 5 years, and so this can be a good reason to launch credit insurance as a new product line for insurance company.
Thank you very much. So yeah, it opens up new markets, growing asset class. There are synergies with reinsurance and lots of opportunities given all the technological innovation that we're seeing today. But I guess let's roll back, because there's another option, which is you could launch it under an MGA model. Benjamin, what are the key differences between launching it under an MGA model and launching it when you're part of an existing general insurance company? Can you maybe talk about the benefits of either in the context of credit insurance launching?
Yeah, and it's an important question when you see the number of MGAs that have been created recently, or the number of projects that are popping up currently. There are differences, obviously. I would say that when you start a new credit business line and you're part of an existing insurer, it's probably sometimes more complex to start, or it can take more time because you're part of an existing structure with existing procedures. So you would probably have more people to convince internally to start this credit insurance activity. I think Amol and Carmine would probably agree on that, especially because trade credit is usually a profitable activity, but it's usually also a very small fraction of the global premium generated by a general insurer. So you have to fight internally to make this launch really a success and to start. So we see it, for example, when you need to, as Tinubu, when we try to address these markets with our software. In terms of the procurement process, it's a lot more stringent when you are dealing with an existing multi-liner insurance company rather than an MGA. While an MGA, it will be more flexible. So they have their challenges, but once you have the support of the insurer and you have the right people on board, you can start this activity in a kind of startup mode, and things can go faster. However, with a general insurance company, you probably can benefit from the resources of this insurance company, marketing, for example, and even more important, the existing distribution network. So yeah, you can find advantages of both kind of setups.
Thank you very much. So I guess we've talked about the kind of why and the what. Let's talk about the how now and how we actually kind of practically move forward with this. And Amol, going back to you because of your experience here. Amol, how should one evaluate whether to build a proprietary system or go down the other route of collaborating with a third party provider like Tinubu? But I'm going to ask you, don't be biased and be impartial here. Because I'm sure you thought about both options, right?
Yes, we did. So we'll just go back to the comment what Benjamin made is being with MGA or doing on your own is a bigger question to start with. However, companies have to be very clear that if they are looking at this product for a long-term perspective, do I lose any control being part of an MGA? If I have our own product or develop it from scratch, we will have one control, manage it better, scale it better in the way which we want. Coming back to what Dipesh you said, it's always a challenge from a system perspective. Should we build it proprietary or should we hire a system? So build versus rent. We had a lot of challenge. First is to get this product passed through our committees, whether we should launch this product. So once we had that answer that this product is profitable, does contribute to our general expansion plan, can interact with our customers better, we had to look at now how. And how was typically a very tough one, because if we have to go and develop our own proprietary system, we may not be able to envisage what changes would occur globally, what new things would come globally, and we would be living in our own world. But if we collaborate with someone who is expert in dishing out these services to many of the insurers across the globe, you naturally would benefit from the changes, upgrades, and innovations which are happening. It's always difficult to develop a proprietary system for credit insurance because it has got so many cogs to be fit in the wheel, right from your commercial underwriting to your risk to your accumulation, your reinsurance program management, last but not the least, claims, and most importantly, how you are interacting with your customer interface. We had deliberated on it a lot. In fact, we were on the verge of being a fronter for someone But then we decided, no, we are a big company, should look at this product carefully, develop it slowly and steadily, but with all the latest innovations, wherein we would be able to benefit out of learnings as well as best in class services can be provided to our clients. It was tough. It still is tough to convince the management time and again when the renewals come. But I believe that the choice we made was one of the best choices. We went ahead with renting the system service, the software as a service, and we are pretty happy. We are able to scale it up. We are able to show the confidence to the reinsurer that everything is in place and the data is still ours. So it takes time. It takes a lot of effort. It's very difficult to gain attention of top management when your product is so teeny weeny within the whole organization structure. But then once management is convinced, I'm sure that there is all the blessings are available at all times.
Thank you very much, Amal. I mean, it sounds like almost a breath of reassurance for other bankers thinking about undertaking this new venture, and also kind of relief there. Benjamin, I'd love to hear if you have any thoughts on Amal's comments, because you were kind of on the other side. And I guess question to you: how does Tinubu strike that balance in terms of governance, tracking, and operational efficiency? And as we also mentioned on the chat to the panelists, please do feel free to ask questions. Everyone's here to answer your questions today.
Yeah, so to add on what Amol said, so Tinubu's business model is really based on the success of our customers, and we have helped a number of companies to start their credit insurance operations. We talked about MGAs, we talked about SBI and general insurance companies. There are also ECAs, export credit agencies. More and more are starting a short-term trade credit activity to support the exporters. So we have a lot of experience helping those companies to launch credit insurance, and we do everything we can to make it possible and to make it a success. So it's not only providing the software, a software that enables to have all the best practices to start, but it's also advisory, so helping on the product definition, helping on sometimes the business plan, helping on the strategy, because we are tied to the success of our customers. And we also have a risk underwriting service at Tinubu, by which we help insurers to have information on the portfolio of buyers, so they can get credit recommendations, they can get ratings, which means that when you start this activity, you usually want to start asset light, I would say. So you can rely on Tinubu for the risk assessment. You can outsource a large part of it to Tinubu, and it gives you some time to build your own capabilities, build your own team, have contracts with information sources, etc. But at least at the beginning, you can rely on Tinubu on those aspects. This is what we've done with SBI. We've also helped on the commercial underwriting. So there was a joint plan to help SBI to start, and we've done that for a number of insurance companies. So I hope it answers your question, Dipesh.
Thank you, Benjamin. I mean, look, it sounds like the definition of a true partnership is probably much more software, but it's also important that all those stakeholders are aligned and bring them on the journey in terms of people like within Amal's organization at SBI, and if Tinubu with expertise kind of help bring everyone on that journey on the client side, it's probably going to be a win-win, right? Carmine, question to you, I guess from a kind of entrepreneurial perspective, what were some of the big, meaty operational and financial challenges that you face in your experience and others may face when launching a new credit insurance venture?
Good. So this is a very strategic question, Depesh, and please let me put in evidence the fact that you have challenges, and I can also talk about some solution due to the fact that I work directly on this kind of case. So from the operational challenges, let's start from the regulatory compliance. The credit insurance sector is heavily regulated, so the entrepreneurs must navigate through complex local and international regulation like licensing requirements, solvency standards, consumer protection laws, and so on. So the solution can be, it's logical, hiring legal regulatory expert that can help the entrepreneur to go through all that. The second point is the risk assessment and underwriting. So the challenge is to have an accurate risk assessment because it's a really critical activity. You need also to take care about the claims and ensure the profitability. So new entrants in this market may lack historical data and robust underwriting models. So the solution could be partnership with third party, and let me talk about Tinubu because I had experience with Tinubu for the underwriting part, and this is just what Benjamin put in evidence. So this could be one solution. Another solution could be also to have a partnership with the reinsurers because the reinsurers can help you to have access to industry data. And another one could be invest in artificial intelligence in order to put in place some predictive analytics and risk scoring. So this can help the company to manage better the risk assessment and underwriting. An important point also is the credibility and trust. You go inside the new sector, so you need to gain the trust and the credibility from the market. And the solution can be to have a partnership with reinsurers. So if the reinsurers believe in you, it's clear that the company is good, or at least they have a good fundamentals. So this is an important point. And sure, another solution is also to have let's say for the technology point of view, a good system that can help you to have to manage better the data. In this case, also, if we are talking about technological infrastructure, we can put in evidence the system of Tinubu, which I know very well. And the system of Tinubu is a complete ERP where you can manage all the sector and the section of the company, and this can help you a lot. And let's say from the operational point of view, the last point, but not least, is the talent acquisition. So attracting, retaining skilled professionals in underwriting, sales, customer relationship, technology, IT, and so on, is no easy. So the solution is offer competitive salaries, but not only that. You need to provide also professional development opportunities for the people, that the people, they feel good inside the company and they know that they can grow, and this can be very attractive for them. This is from the operational point of view. From the financial point of view, the first point is the initial capital. Launching a credit insurance company require substantial capital to meet regulatory solvency requirements, build infrastructure, fund operations, and so on. So the solution could be prepare a detailed business plan in order to attract investors. And in this way, you can also explore some partnership with private equities or strategic investors. So if you have a good business plan, which is clear, you have a more chance to attract people and so to have a fund to launch the company. From the finance point of view, it's also important to have a good balance between competitive pricing and profitability, because the credit insurance sector is a price sensitive market. So you need to find a good compromise between the profitability and the price. And using data analytics to price the policy in an accurate way could be a solution. When we are talking about credit insurance, sure, we need to talk, unfortunately, about claims. Okay, so the cash flow management is also another point to take care, because the claims payouts can impact the cash flow, particularly at the beginning. And I know that at the early stage, you don't have a lot of premium, but if you have a big claims, it's a very, very problematic situation. So in order to avoid that, or to try to avoid that, you need to build a diversified portfolio to spread the risk between sectors, area, industry, and so on. In this way, you can reduce the risk. And another important point is to get agreements with the reinsurers, because in this way you can mitigate the risk, because you share the risk with them. And the reinsurers are at the beginning, also along the path, are very important for a credit insurance company. Another
Sorry,
point.
I'm going to jump in there just to give the other panelists a quick chance to jump in there, because I think question from the audience, and Benjamin, I'm going to jump to you. What are, according to you, some of those forthcoming IT challenges for insurance? I guess, are there concerns around system scalability and adaptability that Tinubu addresses, Benjamin?
Yep. Indeed, we are talking about companies that are starting credit insurance. You need a system to start this with the best practices out of the box, so that you can start quickly your activity. But that's not all. And what you need to assess at the beginning, before going with a technology provider, is indeed the capacity of this provider to support your growth on the different phases. So once you will have started your activity, after a few months or years, you'll have to launch new products. You would probably want to go to new geographies, and let's say offer innovative solutions to your clients, notably to differentiate yourselves from the competition. As Carmine said, it's a competitive market, and not only on the price. It's very competitive. So you need to have a strong offer, and the system would be critical to address those challenges. So at the beginning, you need to make sure that this platform and the IT partner will be able to support you during all your growth phases. So it means a system that is highly configurable, which can integrate with your existing IT landscape, but also with new platforms. You know that there's a number of financial platforms that are around. You need to be able to connect with them. And yeah, modularity, scalability of your platform, that's paramount.
No, thank you, Benjamin. I mean, Carmine, one of the things I don't think we did talk about is actually fundraising. Can you perhaps talk about that as part of this process? You're on mute. Sorry. Yeah.
Again, I'm here. So about the fundraising. So as I said before, the development of a clear business plan, we detail financial projections, including break-even analysis, growth forecast, management strategy. It will be very good to convince potential investors. Concerning the funds, so could be you can diversify the funding resources. So you can sing in funding from private equity firms, from strategic investors specialized in insurance, financial company that are specialized in financial technology, also reinsurer. So the reinsurers also can be interested on that. And another point is to leverage on strategic partnership with banks, brokers, reinsurers, trade organization, insurtech companies, and so on. This is very important in order to find, let's say, to secure the funding for to launch the credit insurance company. Sure, the investors want to see also something that is linked to the mitigation of the risk. So you need to show that you are able to diversify the risk exposure by sector, geography, category, industry, and so on. This is very important. You need to show them that you have a tool in order to put in place an advanced risk assessment, and this is very important. Another important point is for the mitigation of the risk, the agreement with the reinsurer. So you can get agreement with the reinsurer on quota share in order to share premium and claims. You can get agreement on excess of loss, so in order to cover the large claims. So all that is important in order to make sure that the investors that are following you, and you can find the funds in order to create the company.
Thank you very much. I mean, Amal, how would you say, how does the global market for trade credit insurance compare to the regional markets like Southeast Asia vis-a-vis these conversations?
When we focus on Southeast Asia, especially India, the market which you operate in, there is a clear growth. As Carmine also mentioned, there is a demand for credit insurance. There is a good uptick. Across, what we see is that the challenges for the exporters especially are growing, with so many changes in economic decisions across the countries, some turmoils, some challenges, some political risk events, which are actually triggering customers who would have traditionally done business with people to look at securing their businesses. Domestic risks are also increasing. What we see, the relationship of 20 years ago with the buyer supplier is changing. Southeast Asia, especially India, we are seeing a good uptick in credit insurance as a market. Globally, we see there is a positive trend. There is a good demand, and we believe that anybody who is looking at establishing a credit insurance business can look at clearly two aspects: addressing the need of domestic suppliers as well, because they would know their market well, and partner with entities who can actually support you for managing your export business, because you may not know the buyers there, or you may not have linkages to the information agencies, wherein entities like Tinubu can help. But overall, I can say that this is a growing market. If we see Asia, Southeast Asia typically has not been as penetrated from credit insurance aspect as is probably Europe. So there is a huge headway available, and there is, in all probability, we see a continuously growing business ahead.
And maybe I can add on that, because I used to work also in this industry for Tinubu in Singapore, covering Asia Pacific. So there is a real willingness globally from insurers to there is an interest for credit insurance, but as Amol said, it's not at the level of Europe. And one of the reasons is that there is I would say a lack of expertise. So people usually do not know this line of business. and it's taking a bit of time to have people that really understand the business and are able to show to the market how credit insurance can help. So this is one of the main things I've seen, and actually the European market remains dynamic with new entrants. So it's still dominated in Europe, but for sure we see a lot of interest in Asia, and it will certainly grow more than today.
No,
This
thank
time
you.
you're on mute.
I know. Oops. No, thank you. Super helpful. Amal, do you have anything to say in terms of, I guess building on some of the motivations behind SBI General's, decision to enter the credit insurance market, and also just kind of fast forwarding, where's it at now? How's it going? How is the partnership going?
Okay. So we are a bank-backed insurance company. One of the largest banks in the world is holding equity, and it's a system. It's a company owned by a bank. So there was a natural motivation internally to begin with to support businesses to underwrite receivable insurance precisely to assist our customers. The motivation was also there from the fact that it will give us an ability to be more near to our customers rather than offering only your traditional products like fire or transit insurance, that is marine. So how we see this business, as Carmine was saying, that when we begin, we have to be very careful, and there might be challenges in the beginning. There might be a big loss, and if you have a confident reinsurer backing you based on your high compliant systems and processes, we did face that, and we saw a large claim coming up, but with active partnership with our reinsurer, Tinubu and us, we were able to solve that situation. So that actually gave a confidence to our management that this business actually can be scaled up with a proper collaboration. Year 3 onwards, we have seen an exponential growth in the business. It is growing to a pace which we are expecting. Yes, we will see challenges. We did saw challenges during COVID times and other events, but overall, our company is focused to grow this business as much as possible because we clearly see that it brings in value to the bottom line. And it brings in value to our customers as well. So we are clearly focused on this product, and we are scaling up. And with platforms being in place, we can actually look at innovations. Like one of the challenge for credit insurers is how do you manage operational costs? And I believe with AI and a lot of other stuff, we'll be able to bring it down and serve our customers to the best possibility. So to sum it up, SBI General Insurance is committed to grow this business and support overall economy because we are positively contributing to our exporters as well as the domestic small and medium enterprises.
Okay, thank you very much, Amal. Now, I guess they're the easy questions. Now let's talk shop and get to some more challenging questions. Benjamin, I'm going to aim this straight at you because I believe that some of the challenges when you talk about insurers, reinsurers, and effectively platforms or technology companies. Transparency is really important, and actually making sure you operate in a commercially viable environment whilst remaining transparent, but whilst also keeping certain parts of the business confidential. How did you think that happened successfully, and what made that collaboration successful in order to overcome some of those considerations and transparencies of multiple different parties working together to try and achieve success, considering that there are some bits they probably don't want to be transparent about?
You're talking here about the project we had with SBI, right?
Yes. SBI, Tinubu, maybe, and the reinsurer.
Yeah, indeed. In this, it was indeed a partnership between SBI, reinsurer, and Tinubu. And as you said, transparency was the key, because we already talked a little bit about it earlier. But we, on top of the platform, we also helped SBI for some of the operations, commercial underwriting, risk underwriting. We work jointly on that, to a point where SBI was then able to do everything on their own. So there was a clear plan, and we were all in the same mindset, the reinsurer, SBI, and Tinubu, to make this a success. And as we were working hand in hand, we needed to be fully transparent and to get a real trust between the partners, and this is why it has been a success, I guess.
Thank you very much, Benjamin. And sorry, another question directly from the audience, from Rico. What is the recommended minimum business volume and potentially an expected premiums clients based on your experience? I mean, you might not want to answer that straight up, but how do you assess the potential when someone comes to you?
Yeah, it depends on the cases. The most important thing is to understand the motivation of the company, to understand if there is a real willingness from the management to start a project, if the different challenges have been understood. So we do not really look at the premium, especially when you are dealing with a startup, a company starting the activity. There is no premium, so obviously we will look at the forecasts, because it's part of the project, the business plan, and we will sit together with with the insurance company in order to understand if things are credible, if there is the support of the reinsurer. We've talked already a lot about the importance of the relations with the reinsurer, but indeed that's really key, and we need to be reassured about the commitment of the management, the motivation to start the business, and it's not really a matter of the level of premium, especially because it will depend on the type of activity you have, whether you are focusing on large companies, potentially on a transactional basis, like political risk insurers. It will be very different from those players compared to the typical short-term credit insurance whole turnover policies. So each cases are different, and this is why it makes this industry very interesting.
No, indeed, and Amal, a question more geared towards innovation, because everyone wants to innovate and provide a world-class service to their clients. But how at SBI General did you guys balance that need for innovation with that risk of potentially entering new untested markets?
So we try to look at the problem areas, then what clients were facing. So their challenge was, are they able to connect with credit insurers very easily? Are they able to manage their operations? Because credit insurance is a discipline-oriented business. You have to ask limits, you have to apply increases, appeals, declarations, and all that stuff. But when we were launching this product, we looked at how can we easily solve this basic problem we were able to do it via Tinubu platforms because there is a very nice customer interface portal which we built together. We modified it. So probably that was the innovation then. It was required when we launched the product. But yes, alongside, we had to manage the risks better. And the first risk which came to our mind was cybersecurity, governance, overall challenges because we will be handling sensitive data of our clients. At times it would be two competing entities being insured with a single insurer, and giving them confidence that both the data will stay separate. There will be a clear wall. So that was another challenge, and we needed some clarity, innovative practices there. When the business started maturing, we needed to innovate on how do we actually underwrite business, how do we reach out internally, how do we operationally manage it well. And that was also a challenge because handling a large volume with small number of people wherein the experts are less, we have lesser manpower, lesser experts in credit insurance was a challenge. But with a platform like Tinubu, you could customize multiple things, including I'll go a little bit deeper that managing the customer risk parameters, your exposures in the industry or sectors, or to the tune of country risk. So you needed some innovation in form of managing this risk. But yes, it is a challenge even today because now, since the customers are getting used to credit insurance, our existing customer, they need more and more. They need fast decisions. They need quick, accurate, clear decisions. Whilst doing that, we have to manage our internal risk. So it's a difficult balance to maintain. But if you have a good, steady platform, and a good steady set of people who are able to understand the nuances of credit insurance, I believe we can balance it and run the train on the right track.
Carmine, have you got anything to add to that? Because I know you talked about the talent, the minds, and the expertise, and balancing that out with the ability to be agile, to scale up, and to implement the tech in quite a nuanced startup fashion way.
Yeah. In my opinion, Deepesh, the innovative solutions can improve the efficiency of the credit insurance industry. When I say innovative solution, I'm talking about the technical point of view, from the technological point of view. The first point for me is streamlining the risk assessment and the writing, analyzing, a lot of data, including credit history, trade data, economic indicators. In this way, we can assess better, in a very accurate way, the risk. Another point is the enhancing claims management, because the customers, they pay real attention when you need to pay claims, when, how, and so on. So the enhancing claim management give you the opportunity to reduce the time required to process claims through the workflow automation and ensure accuracy by validating against the terms, against the policy. So this means that when you have an automation in this process, you gain trust and loyalty from your customers. So another important point, I think that Amol put in everything, that is the optimization of the customer experience with an online portal, mobile apps that enable clients to purchase policy, file claims, access to in real time to data and updates. So all that is very interesting from the customer point of view. Finally, adopting innovative technology and data-driven tools give the insurance some advantage, like efficiency gains, better risk management, and customers retention. So this means that innovative solution can help a lot credit insurance sector in order to gain trust and loyalty from the customers.
Yeah.
Yeah,
No,
and
thank
that's
you.
And if I can add on that, it's the indeed what it brings to the insurer, but to the customer, sorry, of the insurer, but also internally at the insurer, it's important to have, I would say, innovative tools or good technologies, because it's a way to attract talents as well. We know that credit insurance, some people are complaining because there are too many. There are not a lot of young people, so we already talked about that with Dipesh, I think, in another article or session, I don't remember. But technology is also a way to modernize the industry and to potentially attract more young talents.
No, I couldn't agree more from a personal perspective, and even with my TFG hat on, there's a lot of stuff that we do to really push forward and advocate that. I'm sorry to kind of flip back round a little bit, but another really interesting question from the audience, and Amal, I'm going to direct this to you, because it's all around expectations and volume. What were your expectations at the beginning when you launched the product with Tinubu, and how is it actually realized in practice? Oh, you're on mute. And please, panelists, please, anyone listening, do ask questions.
So when we decided to launch this product, we had a phase-wise approach. We were very clear that what we want to achieve at the end of year 3, year 5. And that was very clear. We had a business plan which was very convincing to the reinsurers who were willing to support us from day one. Remember, we were the company who started this product from scratch. It means we didn't have a single individual in our company who knew credit insurance. So it was from that beginning to to get people, to train people, and to promote the product. This was on one side. Management was kind enough to allow us time. Second was to gain traction, because there were already people, monoline credit insurance companies who were doing business via fronters in the country, and we had to establish ourselves. Our brand was great, is great, will remain great. However, you require that pull. And we expected to be slow business development, but to our amazement, in year 3 we saw that our offering via very transparent system, easy portal, clear communications, appropriate pricing, and good risk assessment actually helped us to grow the business. And that's where people started finding value in SBI General. Another important factor was the help which we got from Tinubu to train our internal staff, especially on claims, because that's the real test of your product. And we were very happy once we had been fully equipped, that we were able to recover a lot of money for our customers. So not only as a product we were offering a great service, but our aim was to ensure that their cash flows remain predictable. That's the end goal of credit insurance, that we were able to fulfill. And during the journey, we actually succeeded collecting more of the receivables for our client even before claims. So there was a clear plan in place. We had a strong help from our reinsurer, the platform, as well as people within Tinubu who had set up such kind of businesses. And it was a journey from an infant to now a teen. I think that's been a good journey for us.
Thank you very much. Now I'm conscious of time. Want to try and get one more question from the audience, and we'll have to wrap this up soon. But Amal, I'm going to flip back to you. One final question. For those other banks that are bankers that are in your shoes, say 3 to 5 years ago, or even longer, what piece of advice would you give to them if they're about to kind of embark on this journey?
So if anyone is willing to start credit insurance, first and foremost is be clear what you want to achieve as the end goal. Have good support of your management. Decide whether you want to do it from scratch or you want to be fronter for someone. But if you are a entity with a big brand, established brand, it is a clear outcome that you should start on your own. Start with a clear ideation that you need to have a strong platform, because transparency is everything in new business, and
Yeah.
reinsurers will support you if you are very clear, transparent, and have a predictable business plan, which may be in the beginning appear to be very conservative, but once you embark on the journey, you will be able to demonstrate to everyone that you are doing right things. And most importantly, manage, retain, and maintain your customers as much as possible. This is no brainer, but actually what we see is that credit insurance is influence driven businesses. So if you one happy customer actually leads to three more happy customers, that's for sure. That's what we saw in our journey.
Yeah, thank you very much. Look after your customers and clients, look after your partners, and look after your team talent and staff. Good suggestions there. Carmine, flip the question over to you. What are your tips for those about to embark on this journey?
Sorry, I had a problem. Can you repeat the question?
What tips do you have for those about to embark on their credit insurance journey?
Ah, yes, yes. So, in my opinion, but I already talked about that, but I insist on this point. For me, is the artificial intelligence and machine learning for enhance the risk assessment. So I insist on this point because the impact of that could be a faster and more accurate underwriting decisions, reduction in claims and loss ratio, because you have a proactive risk mitigation, and you can increase the accessibility of credit insurance for SMEs and unserved market, because as my colleagues say, there are a lot of area where the credit insurance is not well known, is not applied. There are a lot of SMEs that are not using. So with this solution, we can give the access to this product also to this company, because we can better manage the risk, and if we can better manage the risk, we can offer the credit insurance to everybody, because this is a focal point for the credit insurance
Yeah.
sector.
And it's a big growing market. I think you said 7%,
Yeah.
and continue. You can as the CEO said earlier, you can grow the cake. Benjamin, over to you. What are your tips?
I think, yeah, Carmine and Amol said the main things. If obviously coming from Tinubu, I would insist on the system, but they already did. So yeah, you need to have the right system, whether building your own or going for an existing system. I think we answered the question. It's probably now with the rise of SaaS solutions, you have existing platform on the market. And the Tinubu solution is end to end, so you can do everything on it. What's important is when you embark on this journey with an IT provider, make sure that this IT provider has a product which is really for credit insurance, done by credit insurance professionals, and has been proven on the market. So is already used by a number of insurers, which is the case of Tinubu, and with the capacity to follow your growth, your evolution, with great scalability and flexibility.
Thank you very much, Benjamin, and we're about to run out of time. So I would like to thank you all, Amal, Carmine, Benjamin, for your time on this panel session. Just to wrap up, I'd say probably 4 key points. think about your customer experience, think about the exponential growth that we're seeing in technology at the moment and that constant need to deliver customer-centric solutions. Think carefully about your partners, look after them, and carefully assess the business model, the market, and opportunity. So thank you very much for your time. We've run out and we don't have time to finish off the questions, unfortunately. But in terms of next, we're going to take a short break now, but please tune in in about 15 minutes or so at 11:35 European time, where we're going to be exploring supply chain transparency in trade credit, moderated by ICESA's Richard Wolf. Thank you very much.
Thank
See
you
you
very
soon.
much.
Thank you.
Hello. Bye. Bye bye.